Okay, I have a riddle for you to start things off today.
Oh, I like this.
And I promise this isn't just me trying to be clever or, cute. This riddle actually contains the entire investment thesis of the massive dossier we have on the desk today.
I love a good riddle, especially if there's money involved at the end of it. Let's hear it.
Here it is. What is the invisible thread that connects a high-tech Japanese toilet manufacturer, a packet of instant miso soup, and the absolute cutting edge of artificial intelligence?
See, if I didn't have Manal Mehta's market intelligence report sitting right here in front of me, I'd say that sounds like the setup to a very surreal, very bad joke.
It does sound like a joke.
But knowing this report, I know the answer isn't a punchline, it's hidden alpha.
It is absolutely about hidden alpha, and for everyone listening, we need to set the stage here. What we're doing today is it's a forensic analysis of the market.
Right.
We are looking at a document that is designed to strip away the headlines. We aren't talking about NVIDIA. We aren't talking about Microsoft.
Yeah.
We aren't talking about the stocks that everyone and their cab driver is buying right now.
Right, because by the time it's on the front page of the Wall Street Journal or, by the time your cab driver's pitching it to you, that trade is crowded. The excess return is usually gone.
It's gone.
Today is about the underbelly. We are looking at the supply chain bottlenecks, the weird regulatory loopholes, and the scientific breakthroughs that haven't hit the mainstream news yet.
The underbelly is where things get weird. And frankly, where they get really interesting. We're going to talk about why activist investors are suddenly obsessed with ceramics and resins.
Yeah, that part's amazing.
I mean, literally the picks and shovels of the AI gold rush. We're also going to talk about a corporate knife fight for the soul of a major media company.
A brutal one.
And we're going to get into some biotech that, frankly, sounds like it's straight out of science fiction.
But before we get to the toilets, and we will get to the toilets, I promise, we have to start with the water the toilets are flushing in. We have to look at the macro environment. Because according to this intelligence report, the market is currently sleepwalking into a massive regime change.
Sleepwalking is a heavy phrase. It implies we're moving toward a cliff and nobody is looking at the map. So what is the specific danger here?
The danger is what Mehta calls the unprecedented Fed pivot. And to understand this, you really have to look at history.
Okay.
Usually the Federal Reserve cuts interest rates, it makes money cheat for one reason. The economy's on life support.
Right. Things are bad. Unemployment is up. Growth is cratering.
Exactly. Things are breaking. They cut rates to shock the heart of the economy back into rhythm.
It's the defibrillator. You don't use it on a guy who is running a marathon.
Exactly. That's the historical playbook. But look at where we are now. Look at the U.S. economy. By almost every nominal metric, it's running a marathon.
Right. GDP is solid.
GDP is holding up. Unemployment is historically low. The consumer is still spending money. And yet, the Fed is signaling easing. They're signaling rate cuts.
Okay, so play devil's advocate for me here. If the economy's good and money gets cheaper, shouldn't that just be a party for everyone? I mean, why is that a problem?
It's a party for asset prices, briefly, for a little while, but it creates a specific anomaly, a structurally weak dollar. The report argues this is a regime change that most U.S.-centric portfolios are, well, dangerously unprepared for.
Unpack that for me. Why does a rate cut in a strong economy kill the dollar? I thought good economy means strong dollar.
Normally, yes, but it all comes down to the yield differential. So think about it like this. If I'm a global investor, say I'm a pension fund in Tokyo or a sovereign wealth fund in Norway, I put my money where I get paid the most interest with the least risk.
Makes sense.
If the U.S. cuts rates while the economy is hot and while inflation is still lurking in the background, the real yield, that's what I make after inflation, it drops.
So the incentive to hold dollars just kind of evaporates.
It completely evaporates. Capital flows out of the dollar and into other assets or other currencies where the real yield is higher. And here is the crucial part that the report highlights.
What's that?
The narrative on CNBC right now, the consensus view, is that AI is going to create this massive productivity boom and kill inflation dead.
Right. AI will make everything cheaper. That's the story.
That's the consensus. And that's why everyone thinks the Fed can cut rates safely.
But the report disagrees.
The report points to something much stickier. Deglobalization. We are seeing supply chains break apart. We're seeing tariffs. We are seeing small businesses, which, by the way, make up half the economy, still raising prices because their costs are going up.
So you have this sticky inflation hiding in the background.
Hiding in plain sight, really. So if the Fed cuts rates into that environment, you aren't stimulating growth that isn't already there. You are just devaluing your currency.
You're pouring gasoline on a fire that hasn't gone out yet.
Precisely. And the result is a weaker dollar. The dollar index, the DXY, is already down about 10% from its highs.
So if I'm listening to this and my portfolio is packed full of U.S. tech stocks, which, let's be honest, is most people right now, what does that mean for me? I'm effectively shorting the rest of the world, and I'm long the dollar.
That's a perfect way to put it. And the report says that's a dangerous place to be. It suggests a secular shift.
Secular, meaning not just a little dip, but a long-term change.
A long-term rotation, exactly.
Yeah.
The trade is moving from crowded U.S. growth stocks, which are trading at these massive premiums, like 26 times earnings, into international value.
International value. That just sounds like the boring corner of the market where excitement goes to die.
It sounds boring until you look at the math. It is absolutely not boring. U.S. tech is expensive. International value stocks are trading closer to 18 times earnings, so right off the bat, they are cheap. But here is the kicker.
Go on.
They pay double the dividend yield.
Double the yield. Seriously.
Double. And this is the double dividend concept that the report really emphasizes. It's a key takeaway.
Okay, break that down for me. Double dividend.
Okay, so you get the high yield from the company's cash flow. That's dividend number one. That's your direct return. But if the dollar weakens, which is the macro thesis here, then the euro or the yen or the pound that those companies earn becomes worth more in U.S. dollar terms when you convert it back.
Oh, I see. So if I own a European company and the euro goes up 10% against the dollar, my investment is worth 10% more, even if the stock price stays completely flat.
Exactly. You win on the stock yield and you win on the currency conversion. It's a defensive play that acts like an offensive play.
So it's a built-in tailwind.
It's a huge tailwind. The report specifically mentions the Dividend Aristocrat Index as a proxy for this. Low volatility, high return, but crucially not dependent on the U.S. tech bubble staying inflated forever.
So the big takeaway for the macro picture is don't put all your eggs in the Silicon Valley basket. Look abroad, look for value, and watch the dollar.
That's the macro setup. That's the big picture. But now let's zoom in. You promised us toilets.
I did promise toilets. And honestly, this is my favorite part of the dossier because it is the perfect example of this second-order thinking.
This is the toilet theory of AI investing. I love it.
Okay, so let's trace the supply chain. We all know NVIDIA makes the GPUs.
The brains of the operation.
To make those GPUs, you need chips. Those chips are made by companies like TSMC. But to make the chip, you have to perform this incredibly complex process called lithography.
Right, and that's basically printing circuits onto a silicon wafer. You're blasting it with lasers and chemicals at a nanometer scale.
And nanometer is hard to visualize. We are talking about features that are thousands of times smaller than a human hair.
It's almost an abstract concept. It's so small.
And to do that, to etch those tiny circuits, you have to hold that silicon wafer perfectly still.
Still isn't even the right word. It has to be frozen in space. If that wafer vibrates or warps or bends by even a fraction of a hair's width,
Your chip is ruined.
completely ruined. Millions of dollars of product just gone.
So you need a clamp, something to hold it down.
You can't use a mechanical clamp, though. That's the problem. A physical clamp creates pressure points. It actually warps the wafer just by touching it.
And it creates dust, which is a killer in a clean room.
A single speck of dust can destroy a chip, so it's too crude.
So how do you hold it down without actually physically touching it?
You use physics.
Enter Toto.
The Japanese company famous for the bidet and high-end bathrooms.
The washlet, yes. The heated seats, the little water jets, all of that.
Yeah.
But it turns out Toto has an advanced ceramics unit. This business was born out of making sanitary ware, literally toilets and sinks. But they've pivoted that deep ceramic expertise into making something called electrostatic chucks.
And for those of us who don't speak semiconductor manufacturing, let's explain what that is. An electrostatic chuck, or an ESC, is essentially a high-tech ceramic plate.
Okay.
Inside this super pure, super flat ceramic, there are electrodes. When you apply a high voltage to them, it creates a static electric field on the surface.
Like rubbing a balloon on your hair and it sticks to the wall.
Exactly like that, but incredibly precise and powerful. That static field grips the silicon wafer and pulls it flat against the ceramic. It holds it perfectly rigid, but it applies the force evenly across the entire surface.
No warping, no clamps, just physics.
Just physics.
So you literally cannot manufacture modern AI memory, specifically NAND memory, which you need tons of for AI, without this ceramic plate from a toilet company.
Correct. You cannot have an AI data center without massive amounts of NAND memory, and you cannot make NAND memory without these electrostatic chucks. Toto is a critical, irreplaceable part of the AI supply chain.
And here's where the market intelligence part comes in. The report highlights an activist investor, Palliser Capital.
Right?
They've looked at Toto and said, hey, everyone thinks you're a toilet company, but you're actually a hidden tech company.
And the valuation gap is just wild.
Yeah.
Palliser estimates that because the market is ignoring this advanced ceramics unit, Toto stock is undervalued by something like 55%.
55%. Just because people can't get past the bathroom association. That's incredible.
It's a classic market inefficiency. The ceramics unit is growing revenue at 30% a year because of the AI boom, but the whole company is priced like a slow-growth plumbing business.
So what is the activist trying to do?
Palliser is pushing them to improve governance, maybe spin off the unit as a separate company, or just do a better job of telling this story to the market so people wake up and realize the value they're sitting on.
It's not just toilets, though, is it? Let's talk about the soup.
Let's talk about the soup, Ajinomoto.
The MSG people. If you have instant noodles in your pantry, you probably have their product. I know I do.
Right, famous for umami, for Dossier, for all of that. But Ajinomoto does something else. They produce a specific type of insulation resin.
Okay, resin. For what?
It's a film that's used in the packaging of high-performance CPUs and GPUs, the really powerful chips.
Wait, why does a microchip need insulation? I thought the whole point was conducting electricity.
It needs to conduct electricity only where you want it to. Modern chips are packing billions of transistors into a tiny space. They're not just flat anymore, they're 3D. They are stacked on top of each other.
Right, like a skyscraper.
A microscopic skyscraper. And if you don't have perfect insulation layers between those circuits, the signals jump from one floor to the other. You get interference, what they call crosstalk. The chip crashes.
So the resin is the barrier, the insulation between the floors of the skyscraper.
It's called a Ajinomoto buildup film, or ABF. And Ajinomoto absolutely dominates this market. For high-end AI chips, ABF is the industry standard. There's almost no substitute.
So the same company making your soup stock is making the glue that holds the AI revolution together.
Essentially, yes. It's another perfect pick-and-shovel play. The gold rush strategy isn't to buy the gold, or in this case, the AI model, which might succeed or fail.
Right, you don't know if it's going to be OpenAI or Google or someone else.
Exactly. It's to buy the industrial materials that must be purchased regardless of which AI company wins.
So whether OpenAI wins, or Google wins, or X.AI wins, they all need Ajinomoto resin and Toto electrostatic chucks.
They all need them. But there's a warning here, too. The report cites a warning from Cisco about rising memory chip prices.
Why is that?
Because the supply chain is getting incredibly tight. These hidden components are becoming bottlenecks. So while these companies are poised to profit, the overall cost of building AI infrastructure is going up.
Which is an inflationary pressure that goes against that AI will make everything cheap narrative we talked about earlier.
It all connects, which brings us to another layer of this onion. We've talked about the hidden supply chain. Now I want to talk about the second-order oracle.
I love this title. It sounds mystical, but it's actually very practical.
It's very practical. It's about predicting what happens after the thing that happens.
Right. So most people trade on event A. The news breaks, the market reacts. That's first-order thinking.
But second-order thinking is asking, what is the reaction to the reaction? Or, more importantly, who benefits from the fallout?
So let's look at the first example in the dossier. The fast fashion crackdown.
Okay, so Event A is the regulatory heat on Shein and Temu. You see it everywhere. The EU is investigating them for addictive design, for opaque supply chains, for maybe using forced labor. The headlines are all Shein in trouble.
So the first order thought is short Shein or don't invest in Chinese e-commerce. Simple.
Right. But the second order thought, and the alpha trade here, is buy Zara. Or more specifically, Inditex, the parent company.
Okay, why does Zara win if Shein gets in trouble? They seem like competitors.
Because regulations act as a moat, a regulatory moat. Shein's entire business model is built on speed, tax loopholes like the de minimis exemption that lets them ship single items without tariffs, and total opacity.
And the regulations attack all three of those pillars.
Exactly. If they get bogged down in compliance costs, fines, and transparency rules, their prices have to go up and their speed goes down. their advantage disappears.
Meanwhile, Zara is sitting there with a supply chain they've spent decades building.
Decades. Zara already has the physical footprint. They have a traceable supply chain. They pay the taxes. The regulators are essentially building a wall around the market that keeps the cheap, fast disruptors out and locks the customers inside with the established players like Zara.
That is fascinating.
Yeah.
The regulations intended to punish the bad actor actually end up handing a monopoly to the established actor.
It happens all the time in business. Compliance is expensive. Big companies can afford it. The disruptors often can't.
Okay, next second-order effect. This one made me laugh, but it's also kind of inspiring. The swole senior phenomenon.
This is a great demographic shift. I mean, it's really profound. We are seeing a move away from just cardio for older adults.
Like walking on the treadmill.
Right. The science is now crystal clear that for longevity and to prevent bone loss, osteopenia, and osteoporosis, you need to lift heavy things. You need resistance training.
So Grandma isn't just walking around the block anymore, she's deadlifting.
She's deadlifting and she's doing squats. Resistance training is the new aspirin. And the trade here, according to the report, is Planet Fitness.
Planet Fitness, the lunk alarm place? That feels really counterintuitive. I thought that was for people who didn't want to lift heavy.
And that's exactly why it's the right play. It's about the total addressable market.
Okay.
For years, the gym market was 18 to 40-year-olds trying to look good for the beach. If you suddenly unlock the 60-plus demographic as a medical necessity customer base,
that is a massive, massive expansion.
it completely changes the business from a vanity play to a healthcare necessity play. And Planet Fitness has the low-cost, non-intimidating model that works perfectly for that demographic. A 70-year-old isn't going to Gold's Gym to grunt with the bodybuilders.
No, I'm not.
They want a clean, simple $10 a month place to do their prescribed exercises without feeling judged. That's the Planet Fitness model.
So buy PLNT because the boomers are pumping iron. I love it. Okay, third one. And this connects back to AI, Answer Engine Optimization, or AEO.
This is a term we are going to be hearing a lot more. We all know SEO, search engine optimization, trying to get your website to the top of Google.
Right.
But people aren't searching Google as much for certain things. They are asking ChatGPT, they are asking Perplexity, they're asking, what is the best running shoe for flat feet? Or how do I fix a leaky faucet?
And where does the AI get the answer?
That is the billion-dollar question. And the answer, increasingly, according to the data in this report, is Reddit.
Reddit, the place with the cat memes and the arguments about video games.
The very same. The report highlights that Reddit is the most cited source for solution-seeking prompts. Because it's human conversation, it's real people solving real problems. When you ask an AI for advice, it seems to prioritize authentic human experience over some SEO spam blog that's just stuffed with keywords.
So the trade is buy Reddit, since they went public.
The thesis is that Reddit transforms from a social media site into critical infrastructure. If you own the corpus of human conversation that trains the large language models, you own the new goldmine.
It's not just a chat forum anymore. It's the Library of Alexandria for the AI.
That's a great way to put it. And companies are starting to realize this. They are paying to influence those conversations. We'll get to that later. But yes, the core idea is that Reddit becomes a data utility, not just a social site.
All right, let's pivot from tech and trends to some good old-fashioned corporate warfare. The report calls this segment Media Chaos and Corporate Knife Fights.
And it is brutal out there in the media sector. I mean, truly, we are looking at what's described as a three-way standoff between Paramount, Warner Bros., Discovery, and Netflix.
And Paramount seems to be the one getting stabbed from all sides.
Paramount is described as the weakest link in the chain. They are fighting a war on two fronts. On one side, they have these M&A battles, merger talks, Warner Bros. Discovery has basically given them a put-up-or-shut-up deadline to figure out a merger.
And on the other side, what's the second front?
Internal decay and regulatory terror. This is where it gets really political. The report mentions a quote from the FCC chairman saying, and I'm paraphrasing, broadcast licenses are not sacred cows.
Ominous. That's a direct threat.
It's very ominous. And look at the chilling effect it's already having. The report cites this incredible example where CBS, which is owned by Paramount, blocked an interview with a politician on The Late Show.
Why would they do that? A big political interview is ratings gold.
Because they were terrified of equal time rules. They were terrified that if they put one politician on, it would give regulators an excuse to block their merger. They were afraid of jeopardizing their chances.
Though they are self-censoring, to keep the deal alive. That's
Yes,
incredible.
exactly. It's corporate capitulation. The expert analysis in the report is to short Paramount.
To bet against them.
To bet against them, not just because the core business is struggling with streaming, but because the regulatory concessions they will have to make to get any merger approved will cripple them.
It's a poison chalice. Even if they win the merger, they lose the war.
That's the thesis.
Right.
And it's not just media where you see these fights. We see this knife fight mentality in other sectors, too. Look at Pfizer.
The payments company, what's happening there?
An activist investor, Jana Partners, is in there now. They are pushing for a big turnaround. The stock has been underperforming its peers for a while, and the activists are basically saying, fix the margins, stop buying random companies, and focus on your core business. It's a classic activist playbook.
And then there is Massimo. This is a crazy story. Danaher is buying them for $10 billion.
A 40% premium, which is huge. And you have to ask why. It's because an activist investor, a firm called Palatine, got in there first and cleaned house.
Explain the backstory here, because Massimo makes medical devices, right?
They make pulse oximeters, the little clip they put on your finger at the hospital that measures your blood oxygen.
A very stable, high-margin, great business.
Fantastic business. But the CEO got ambitious and decided to buy a consumer audio company, Sound United, the company that makes Denon and Marantz speakers.
What on earth do high-end speakers have to do with hospital pulse oximeters?
Absolutely nothing, and that's what the market said. The stock tanked. Palatine, the activist, came in, waged a proxy war, won board seats, and forced Massimo to sell off the audio business.
And as soon as they did that,
The core medical device business was pure and attractive again, and suddenly Danaher swoops in with a $10 billion offer.
so activism works. It can unlock a ton of value.
In this case, it unlocked billions of dollars in value almost overnight. It's a textbook example.
But not all financial maneuvering is so heroic. We have to talk about the Mobileum case. This is the private equity fraud section of the report.
This is the dark side of the deal world. It's described in the report as pass the parcel fraud.
Like the kids' party game.
Except the parcel is a company with fake numbers, and the players are billion-dollar private equity firms.
So what happened?
The allegation is that two executives at a company called Mobileum faked their revenue. They literally invented invoices, created fake clients, and inflated the numbers to boost the sale price when they sold the company from one PE firm, Audax, to another one, HIG.
So they pumped up the numbers, sold it for nearly $1 billion, and I assume they pocketed some huge bonuses.
Exactly. And then not long after, the company filed for bankruptcy. HIG, the buyer, looked at the books post-sale and realized the revenue they thought was there just wasn't. It was a mirage.
That is staggering, the audacity of it.
It creates a massive ripple effect because now every private equity firm doing one of these secondary buyouts, buying a company from another PE firm, is going to be double and triple checking the books. It just chills the whole market with suspicion.
From financial fraud to something a little more tangible, let's talk about oil.
The energy sector, yes.
The report points out a really interesting paradox. U.S. oil production is at a record high, 13.6 million barrels a day. We are awash in oil, it seems.
We are. But the report calls this a technological peak, not a geological one.
Okay, what's the difference? What does that mean?
It means we aren't finding massive new pools of oil. We aren't discovering another Saudi Arabia under Texas.
Right.
We are just getting incredibly, incredibly good at sucking the last drops out of the rocks we already know about. The report talks about them using 4-mile lateral wells.
4 miles,
Oh,
horizontally.
Imagine a drill that goes down a mile and then turns sideways and drills horizontally for 4 miles through a thin layer of shale rock.
That is an unbelievable engineering marvel.
It is. But here's the problem. Tier 1 acreage, the easy, juicy rock that's full of oil, is being exhausted. We are drinking the milkshake, to quote the movie There Will Be Blood, but the cup is getting empty.
So the forecast is a plateau.
Production plateaus this year, the report says, and actually starts to decline by 2027. The easy oil is gone.
So if the easy oil is gone, how do we keep the lights on? What's the trade?
You need more tech. As the geology gets worse, the technology has to get better. And that's why the trade here is Schlumberger, SLB.
Oil Field Services Company.
Exactly. They are the ones who know how to drill the 4-mile wells. They are the ones with the advanced fracking sensors and the AI-driven reservoir modeling. The service intensity per barrel is going up.
So even if we pump the same amount of oil, it costs more in services to get it out of the ground.
And Schlumberger gets paid either way. It's another great picks and shovels play.
That makes perfect sense.
Mm-hmm.
But there is a downside to all this fossil fuel burning, and the report draws a terrifying line between pollution and health.
This is the health connection part, and it's not about lungs this time, which is what you usually think of with pollution. It's about the brain.
A new study came out linking fine particulate matter, that's PM2.5 pollution from cars and power plants, directly to Alzheimer's disease.
And this is the key part, independent of other factors. So even if you exercise and eat right and have good genes, if you are breathing bad air, your risk of dementia goes up.
How does that work?
The particles are so small they can cross the blood-brain barrier. They get into your brain and cause chronic inflammation, which is one of the key drivers of Alzheimer's.
That is heavy. I mean, that's terrifying. So what is the market response? What's the investment angle?
The investment angle is Johnson Controls, JCI.
The HVAC people, they make air conditioners and heaters.
Exactly. Air quality in buildings is moving from a nice-to-have to a public health priority. If pollution is proven to cause Alzheimer's, then high-end filtration systems in offices, schools, and homes become critical health infrastructure. Johnson Controls is the leader in that space.
It's amazing how these things connect. Oil drilling tech leads to pollution, which leads to Alzheimer's, which leads to buying stock in an air conditioner company.
That is the essence of this report. It's all about connecting the dots that nobody else is looking at.
Speaking of connecting dots, we're going to go into the deep science section now. And this is where I need you to really hold my hand because we are talking about Uber for cells and GPS for tumors.
This is the frontier science segment. Definitely high risk, but potentially very high reward. We are leaving the world of toilets and entering the world of cellular engineering.
Okay, let's start with the Uber for cells. What on earth is that?
Okay, so we all know about RNA therapies now, thanks to the COVID vaccines.
Right.
But the big problem with RNA is that it's fragile. If you just inject it into the bloodstream, the body's enzymes tear it apart before it can get where it needs to go.
So it gets canceled before the ride even starts.
Perfect analogy, right. So enter extracellular vesicles, or EVs.
Not electric vehicles.
No, definitely not. These are microscopic bubbles that our cells naturally release to talk to each other. They are nature's own delivery vans. They float through the blood, they dock with other cells, and they drop off messages like proteins or RNA.
So the idea is to hijack these natural delivery vans.
Exactly. You engineer them to carry a drug payload. The report mentions a specific breakthrough from a research group. They've created a cocktail of 15 different microRNAs. They call it MIRCOM-15.
Catchy name, but what does it do?
It's being tested against triple-negative breast cancer, which is a very aggressive form of the disease. Because it's a cocktail, it attacks the cancer's growth network on multiple fronts simultaneously. It's what they call a network-busting payload.
And because it's delivered inside a natural EV,
The body doesn't attack it. It slips past the immune defenses like a stealth vehicle. It's a game changer for drug delivery.
that is huge. Okay, what about the GPS for tumors? This one involves something called TATAs.
TAPAs. It stands for Tumor-Associated Proximity Antigens.
I still prefer the Spanish appetizers, but go on.
Think about how we usually target cancer drugs. We look for a protein on the surface of the cancer cell. Let's call it protein A. We design a drug that finds and kills anything with protein A on it.
The problem being that sometimes healthy cells also have a little bit of protein A.
Exactly. And that causes toxicity, side effects. That's the core problem of chemotherapy. TAPAs changes the game entirely. It uses something called proximity-informed graph learning.
Okay, English, please. What does that mean?
It means it doesn't just look for protein A. It looks for protein A standing right next to protein B.
Ah, so it's the combination, the proximity.
It's an ND gate. The drug is only activated if protein A and D, protein B, are next to each other. This specific pairing might exist in high density on the tumor, but it never exists on healthy tissue.
So you can hit the tumor with a massive dose of the drug, and the healthy cells are completely invisible to it because their proteins aren't standing in the right order.
Precisely. It solves a toxicity problem. It could make cancer treatment far more effective and with far fewer side effects. They are targeting the RAGE pathway, which is involved in inflammation, using this method. It just opens up a whole new universe of druggable targets that were previously considered untouchable.
That's incredible. Truly incredible. And finally, in the science section, the detectron, which sounds like a transformer.
It sounds cool, but it's for Alzheimer's again. It uses an RNA to DNA barcode biosensor.
Barcode, like at the grocery store.
Sort of. Imagine a sensor that can read the splicing defects inside a cell. In Alzheimer's, sometimes the genetic code gets spliced together wrong when it's being read. It's like a typo in a manuscript. This creates a faulty protein.
Okay.
The detectron can spot these specific typos, and you can use it to screen thousands of small molecule drugs at once to see which ones can fix those specific typos.
So it's a spell checker for your DNA.
A spell checker that allows for massive, high-speed drug discovery. It's about accelerating the search for a cure by orders of magnitude. It's about speed and scale.
We've covered a lot of ground, from the macroeconomy to the microbiology. I want to close with the global intelligence segment. There are two big stories here about how companies are navigating this really complex new world.
Right. First, we have Bayer's Gambit.
This is about the Roundup weed killer lawsuits.
It's been a nightmare for them. It has cost them billions and cratered their stock price. But Bayer has a long-term strategy. They are paying out between $7 and $10 billion to settle a huge chunk of the existing claims.
That's a lot of money to just make the problem go away.
It is, but they are playing a long game. They are betting that the Supreme Court will eventually rule that federal EPA approval trumps state failure to warn laws.
So if the feds, the EPA, said this chemical is safe to use as directed, then the state of California can't sue you for not putting an extra warning label on it.
Exactly. That is the argument. Federal preemption. If Bayer wins this at the Supreme Court, it doesn't just help them with Roundup. It shields the entire chemical and pharmaceutical industry. It's a massive legal firewall they're trying to build.
Very high stakes. And the last piece, we touched on this with Reddit, but let's go deeper. The non-human influencer.
This is the rise of AEO answer engine optimization, and it's one of the most fascinating shifts in the whole report.
The report says, and I'm quoting, "Marketing is no longer just for humans."
It's a profound shift. For 100 years, marketing was about grabbing your attention. A billboard, a TV ad, a catchy jingle. Now, companies like Vibe are using billboards in tech hubs not for the drivers, but just to catch the attention of the developers and the data scrapers for the AI models.
They're marketing to the chatbot.
You have to. If a customer asks ChatGPT, what is the best software for team collaboration, and the AI doesn't know your product exists, or worse, has bad data on you, you are completely invisible in the marketplace.
Yeah, the report mentions this concept of data hygiene. What is that?
This is the scary part. One bad Reddit thread from 3 years ago where someone complained about your product could poison the AI's answer about you forever. It becomes part of the permanent record. So brand reputation management now means scrubbing the internet, seeding positive content on Reddit and Quora, and actively ensuring the training data likes you.
You aren't just spinning a story for the public anymore. You are rewriting the memory of the machine.
That is exactly what it is, and it's a whole new industry that's being born right now.
So let's wrap this up. We've gone from the toilet ship connection to the exhaustion of U.S. oil wells. We've looked at regulatory moats for fast fashion and spell checkers for Alzheimer's.
The common thread, really, is looking where others aren't. While everyone watches NVIDIA, this report is telling us to watch the ceramic chucks. While everyone is obsessed with the Fed rate decision, we should be watching the dollar index.
And I want to leave you, the listener, with a final thought based on that last segment about AEO.
Go for it.
If Reddit is the knowledge base for the AI, and if companies are now paying to optimize their presence there to clean up their image in the training data, are we entering an era where our truth is determined by who is best at manipulating the training data of a machine that doesn't actually know anything?
That is the ultimate second-order question, isn't it? If the oracle is trained on marketing, what happens to the truth?
Something to chew on. Keep digging, everyone. See you next time.